Hey guys, this is George. This is something not everyone is talking about, and I wanted to discuss it, the Baltic Dry Index. The Baltic Dry Index, or the BDI, is a number issued daily by the London-based Baltic Exchange. Now, this index provides an assessment of the price of moving the major raw materials by sea, you know, in the shipping containers you see if you are ever at the ports. Now, taking in 26 shipping routes measured on a time charter and voyage basis. So every day, the Baltic canvasses brokers around the world and asks how much it would cost to book various cargoes of raw materials of various routes. You know, 100,000 tons of iron ore from San Francisco to Hong Kong, for example, or 1 million metric tons of rice from Bangkok to Tokyo. Now, the index is made up of an average of the the carriers or the other indices, and these indices are based on a professional assessment made by a panel of international shipbroking companies. Now, why do we follow it, or why do economists follow it? Is the index measures the demand for shipping capacity versus the supply of dry bulk carriers. Now, the demand for shipping varies with the amount of cargo that is being traded or moved in the various markets. Now, here's what is interesting with the current developments. The Baltic Dry Index falls 93%. This is definitely a warning sign. It's a direct indicator of the health of the vital worldwide shipping and supply activity, as well as the potential health of the global economy. And it's recently slipped to 93. It slipped more than 93%. Its value has gone from over 11,000 to less than 800, with little except for a floor of 0 to suggest the slide will stop in the near future. This means that worldwide the demand for cargo ships, and more importantly raw material that goes into producing the everyday items that you and I buy, has come to a near standstill. This is major news, folks, and they're not talking about it. This is an indicator of the massive worldwide slump, and likely foreshadows more economic woes, not just for the U.S. but for the entire globe. Everything that's getting shipped is coming to a standstill. If I haven't had to tell you before, start working on a garden. Start looking at local ways to obtain food and necessary supplies to live. Now, to understand the Baltic Dry Index, one has to approach this economic telltale from multiple angles. Basically, the index is set up where the supply of raw materials meets the demand for ships to be booked to carry those materials. And I have some graphs I'll go over really quick later on. And the index is broken down into different segments. Now, generally, when the BDI is charting a gain, stocks will likely close up. Now, countries whose currencies are good market indicators of the worldwide exchange, like the value of Canadian and Australian dollars, on their way up as well. When the BDI is performing badly, generally the U.S. and worldwide stock markets are likely to also perform badly in the near future, and the currency of the countries previously mentioned, who are heavily affected by the foreign goods and raw materials exchange, will also likely soon show large losses. This is because the BDI shows exactly where the worldwide demand for raw goods and material rests at any given period. When these raw goods and materials are not being moved around, production of almost everything imaginable will slow down due to the tightening supply of worldwide goods. And then here's another interesting fact about the BDI. Unlike gold on COMEX and silver, it's not currently a tradable exchange. And therefore, it can't be manipulated by speculators or short sellers. This means that it is a fairly well insulated against inaccuracy, like what we're seeing in gold and silver. It can't be manipulated very easily by the elites. And companies would not pay to book a cargo ship for the transfer of millions of dollars in goods if they were not sure that they could produce them for delivery. So while it's important to look at the recent tumble in the BDI's value as possible harbinger of worsening global economic conditions, it is possible to speculate about the cause of this huge loss and therefore take some of the mystery and potential fear of the gut-wrenching economic development. One of the biggest factors that could be contributed to the BDI's recent massive downturn is the U.S. international credit crisis. Of course, if the U.S. is getting its credit lines cut, if the credit markets are freezing up, we cannot buy the grain, the food, the items, the basic commodities that we need to keep this country running. The walls are going up, everybody. This country is shutting down, and they're not telling you about it. So guys, the Baltic Dry Index, research it, look it up on Google. It's pretty important stuff. I'm just learning about it myself, but since no one else is talking about it, here it is. And take a look at some of these the graphs too. Now, banks used to be able to sell the cargo outright to pay the debt of a buyer in default. The situation has now changed because consumer and financial sector confidence has fallen to such a degree in consumer goods being shipped from overseas and an economy that has been down. These same banks are reluctant to trust and they could sell the ship's cargo and recoup their potential loss due to the default of payment, either by raw goods, buyer, or another bank. The booking of ships to carry materials is fairly inelastic market, meaning that it's hard to build a new ship quick enough to meet rising demands for shipping service, just as it is extremely costly for shipping companies to have these same ships idle and not working or generating revenue, which we are seeing right now. The ships aren't moving, people. The goods are not coming in. The warning signs need to be going up. At least for your friends, family, and people that you know, since they are deciding not to report on this. Another important factor that may be driving the enormous downturn in the BDI could simply be the drying up of demand for consumer goods. More likely, we have a need for consumer goods. We need many, many items to survive here in the U.S., but we are seeing a killing of the credit and the absolute destruction of the financial markets, and that you will see us cut off from the rest of the world. And real quick, here's some charts I wanted to show you guys. This is just some general from investmenttools.com. This is the BDI 200-day average. So kind of you can see the huge decline. And then as you move over to a kind of a zoomed in version, you can see how much we've declined in that. And this is the BDI versus gold, and you can see gold is holding itself pretty nicely, and the Baltic Dry Index in relation to that. And then here's the BDI versus the CRB, and then of course the BDI versus crude oil. And crude oil has dropped off the face of the earth, and you'd think it would perform somewhat better versus that, but not even close. And we also see the Baltic Dry Index versus the S&P, and we know stocks have taken a huge hit, and right down there below it is the BDI. And we can also see the BDI versus soy, and the BDI versus copper, and finally the BDI versus the 10-year Treasury note. Okay guys, hey, thanks for tuning in, and I'll talk to you later.